thinks the time frame is, whether it's short, medium, long. But the combination that you use for those moving averages for the end of day charts is computer generated based upon a number of run-throughs, number of iterations that it comes back to which is the best. I do look at the other indicators, some of the oscillators, and some of the, for example, stochastics, RSI, some of those. The problem that I find with some of the indicators is that they're good when they're good, but when the market changes into a trending type of a condition, they can kind of hang, right at the threshold for a long period of time, and I don't know that they're as reliable. But conjunction with other types of clues, yes, they can have some value. But in some cases, I think it would also be better to take a look at just what you can see there on the chart and the indicators then as kind of a corroborating type of corroborating type of evidence that you need to support a particular type of a decision you want to make. Okay, question, can you define fade predicted highs and lows? Vantage Point has the next day predicted high and the next day predicted low. Forecast that's each day, so you have the trading range, the expected trading range for the next day based upon price, based upon volatility, based upon the intermarket influences. And so you kind of have a clue as to what the market should do, a probability. It's not like, as I say, locked in stone, because markets do a lot of different things that you can't rationally explain. But there are points at which you can say this is where we expect the market to trade within this high and this low. If the market then, on an intraday basis, again, this is not the way everybody's going to want to trade, but if the market then moves up toward the predicted high, again, opens in the middle range, moves up toward that predicted high, you want to fade that predicted high. If the predicted high, for example, just to pick a number out of it, were like, say, 8, you'd want to fade that predicted high, and on a limit order, you would want to sell at 7, let's say. And as the market then moves down, let's say that predicted low that you had is, let's say, 2, you'd want to fade the low, and you'd want to sell, or you'd want to buy, rather, close your position at 3. It's just a way of capturing what is expected to be the price range for the day, capturing a portion of it. You will not get the whole range. I mean, I don't think anybody's ever going to trade at the predicted high or the predicted low or the actual high or the actual low, but you're trying to capture the middle part of the range by using the predicted high and the low as clues to entry or exit. Okay, it's missed how long you define a medium time frame, 5 days, a week, or longer. Each of the, if you have the Vantage Point software, you can see that there are some various combinations. The medium-term time frame is a comparison of the 4-day exponential moving average of typical prices. A typical price is average of the high-low close, and the actual moving average is a 10-day. So you're trading 4-day exponential versus a 10-day actual moving average, simple moving average of the close. That's for the medium term. The short term, they have their criteria. I believe it's a 2-day predicted exponential moving average versus a 5-day. Long term, I think the longest term there is 6 days for the actual, or rather for the medium term. I'm usually not using that one on that term, so I'm not. I'd have to go back to the question of, or have you asked that question rather of the Vantage Point folks to get the exact numbers. Those, as I say, have been defined by the computer and determined by the computer to be the optimal combination. So, it's not something that I necessarily say, well, this is, something you can test and you can, do it as many times as possible. But, the computer has done it, so you can rely, I think, on what the Vantage Point combinations have to give you the best clue for the period. Medium term would be, if I had to say a time frame, it's probably not going to be for more than 3 or 4 days. Short term, you're talking only a couple of days, and long term, you're probably not talking for more than 6 to 8 days. If I were just to say, this is kind of how I would look at it. I know long term for a position trader might be several months, but we're not talking here, because for the most part, just like a weather forecast, you really can't forecast very far out. You can, short-term forecast can be pretty reliable. Long-term forecast, not so much. Question: the entry time frame is confusing me. I download data at 6:30 Eastern Standard Time. At what time do I create an entry trade based upon the predicted high or predicted low? Well, first of all, you have to be able to, again, as you mentioned, get your data. I get mine at the same time. You're talking about 6:30 Eastern. For me, it's 5:30 Central. Download the data. Because of the extended period of time, what you would call, or what I would call anyway, the opening range is going to probably be from roughly that start of the day, which is around, well, to put it in our time, it would be around 5 o'clock in my time, 6 o'clock in Eastern time p.m. until roughly 2 a.m. or so the next day is what I would consider kind of that opening time frame. And the only reason for 2 p.m., 3 p.m., right, or 3 a.m. rather, or 2 a.m., whatever you're looking at, is because of the influx of traders from the European market that come in and start to influence the market and start to, you know, make it move. So that's kind of what I would call the opening time period. I know that it would be ideal to have you know, that data from the beginning, but for the most part, you know, it's going to be able to cover that opening time period if you still, you know, you're downloading after the period has started, but you can still use that as your projections. At least I find it to, you know, be fairly sideways trading until you get into that early morning hours for us Central Time Zone people. Okay, I can see no other questions, and I'm pretty well out of my time allocation. So if you have any other questions about some of the strategies, you can always go back to the archives, look on TraderPlanet.com. Lots of different webinars that we've done over the past on a number of different indicators, more detail and so forth on any number of topics. So you can go back, check those out. You can also stay tuned because we'll have a number of other webinars in the future. And by the way, if you have any suggestions for webinar topics you would like to see, or strategies or anything like that, you know, be sure to let us know at Trader Planet, and we will try to incorporate them in future webinars. So for today, I thank you for attending this webinar, and I do look forward to seeing you at webinars in the future. Darla, turning it back over to you.
Thank you, Daryl. The recording for this webcast will be posted on Trader Planet within the next 24 hours, and we will be emailing the link for the recording to each of you. If you are interested in seeking further information on VantagePoint intermarket analysis software, we urge you to contact our friends at Market Technologies, the makers of VantagePoint, via the phone number on your screen. This concludes today's presentation. Thank you for attending, and all of us here at Trader Planet wish you a pleasant evening.